going to call this the Paula Abdul market.
Okay. Paula Abdul.
Paula Abdul market.
Tell me
Maybe Janet Jackson
the thinking
market. What have you? I think it was Janet Jackson. What have you done for me lately? Okay. Right. That's what it comes down to. We've got the gains. The question is, have the gains for the year all been made?
I would say no. And I'm saying that even though I thought I was being reasonably bullish in early January, calling for 10 to 15% returns this year. I mean, we're right about in the middle of that range. But if you think about what's really driven the rally, three basic things, right? So we've had a big shift in Fed rhetoric and actions, right? Going from nowhere near neutral to an emphasis on patience and a newfound flexibility on the balance sheet. Valuations had gotten incredibly low if we go back to Christmas Eve when we had hit the low. And now we have receding geopolitical risks. So whether it's on the China front or the possibility that we could get a delay in Brexit, if we do get a breakthrough with the China deal, and if we do get a Brexit delay, I think that could push the market.
Which one do you think is more important?
I would say the China trade deal. So if we can put that away, if we can get some sort of détente there ahead of the presidential elections, then I think that would there would be a big decline in risk premia.
They are expected, President Xi and President Trump, to meet, according to our president, in Mar-a-Lago in Florida coming up. Do you think some of that optimism is already priced in, Ed?
I think some of it is priced in, but I don't think it's fully priced in.
So if they go to Mar-a-Lago, if we get a positive tweet or we get an actual deal, a handshake, we see the smiles, does the market rally again?
I think so. Yeah, I think we've got some more fuel in the tank here.
Brexit. Last night we had a big U-turn by the Labour Party. I don't want to get into UK politics too much.
Okay.
But it looks like they may be willing to call a potentially another popular vote, which could reverse, we don't know, but it could reverse Brexit. If Brexit looks like it's off the table, is that another layer to this market?
That would be. I guess I would consider that to be a pretty low probability that Brexit would actually be reversed. But if we do get a delay here, more time for negotiation. I mean, we've got to remember that we were not long ago the Baker Hughes index of economic policy uncertainty was at an all-time high with 20 plus years of data. So if we can bring those risks down a bit, that's going to be more fuel for the fire.
Quickly, how do valuations look?
Valuations look good. I mean, they're not anywhere near as enticing as they were at year end, given the big sharp move that we've had. But if we look at PE ratios in the United States and globally, they're right about the 50th percentile globally and maybe the 60th percentile in the United States. In an environment where interest rates are low and inflation is not a threat, I think those are good valuations.